I will now hand over to Robert Parker, Chairman of ICMA Asset Management and Investors Council, to start the event.
Good morning, everybody. My name is Bob Parker. I chair the Asset Management and Investors Council, which is, as you probably know, is the buy side of the International Capital Markets Association. And welcome to our virtual panel discussion today on central bank digital currencies. The panel will be moderated by my friend Max Castelli from UBS. And in addition, we have three experts on the panel. So Alex Stervanu from the Banque de France, Laurence Arnault from AXA Investment Managers, and Christian Kopp from Union Investment. I think just by way of introduction and background comments, obviously this discussion about the development of central bank digital currencies is against a background of the widespread development of cryptocurrencies over a period of many years. And I think it's worth just reminding ourselves that Bitcoin was actually first introduced in 2009, so 12 years ago. Then, of course, the value of Bitcoin was $1 per coin. Recently, it reached $70,000 per coin, although we've seen in recent weeks quite a major correction. So today we are trading at just under $48,000 per coin. Around the development of cryptocurrencies themselves, we've obviously seen a number of related products, so a number of exchange traded funds, also mutual funds and derivatives. And obviously there where derivatives, we've seen an element of leverage being introduced into the investment and trading of Bitcoin. And it's not just Bitcoin. In cryptocurrencies, we now have a whole raft of alternatives to Bitcoin. Now, there are a number of problems, obviously, with cryptocurrencies. And the first one I mentioned, the price changes of Bitcoin. And one aspect of digital currencies is obviously for investors, they want to see stability and a store of value in which they have confidence. So, one of the challenges in the crypto market is the extreme volatility and associated with that times of quite large speculative overhang in trading in cryptocurrency. I think the other issue is an issue which we will be touching on today, which is regulation. If we go back to the early days of Bitcoin and other cryptocurrencies, there obviously was very little regulation. That regulation is now increasing, and that's particularly the case in the Chinese approach to cryptocurrencies, where there has been quite a dramatic increase in regulation. And obviously one issue for regulators, for investors, and for central banks is the question of ensuring investor protection. And that is obviously key in any asset class. Another issue and another problem which has been, I think, focused on quite extensively is the use of energy consumption. And coming back to my earlier comment about Chinese regulation, it was quite interesting that the Chinese authorities have attempted to stop Bitcoin mining in China for a number of reasons, but one of the reasons was just the huge amount of energy consumption involved in mining. So a number of challenges, and against those challenges, central banks and other public sector institutions have come up with ideas on developing digital currencies. A number of central banks in Asia and in Europe are working on programs to introduce central bank digital currencies. And, in our panel today, we want to give you an update on the progress that central banks are making in introducing these digital currencies, what form they will take, and the timing of the introduction. And then as investors, obviously we want to know what are the implications for investors, what are the implications for the banking system, for the asset management industry. And I think one key question is, should we regard central bank digital currencies as just as a payments mechanism or as an investable asset class? So that's a summary of the questions that we are going to be addressing today. And on that point, I'd like to pass over to Max Castelli to start the first part of our panel. So Max, over to you, please.
Thank you very much, Bob, for the introduction. I think you perfectly prepared the ground for what I'm sure is going to be a very interesting conversation between a group of distinguished experts on the field. Let me first of all introduce myself. My name is Massimiliano Castelli. I work in UBS Asset Management as the head of strategy for sovereign institutions, which include the central banks, sovereign wealth funds, and over state control investment vehicles. So, of course, in the conversation that I have on a regular basis with the sovereign institutions, particularly central banks around the world, the whole question of digitization as a major transformative trend is a very big topic. The topic comes in different forms, of course. It comes both in terms of investment opportunities. If you look at the digital landscape, you might have read, for instance, that we are at the peak, for instance, of investment in fintech companies in the venture capital world. But of course, another topic which is often mentioned is the rise of digital currency, so decentralized digital currency or cryptocurrency sometimes, as they are referred to, and of course, the work being carried out by central banks in developing so-called central banks digital currency. So the topic, this is the topic of today's panel. We will split the panel into two parts. First, we will look at the sort of CBDC. What type of issues do they raise? Where do central banks stand? And what we can expect in the future. While instead, in the second part of the panel, we will look a little bit more at the implication for investors. So without further ado, let me move immediately into the topic. And in order to really introduce the topic of CBDC, I would like to share with you the results of a survey that we carry out at UBS Asset Management in June of 2021 on the side of our annual event for central banks called the Reserve Management Seminar. It is very much a focus on reserve management, but every year we have a special section. And the special section of this year was about the CBDC. So if I look at, basically, I will look at a few slides which give you an idea at the perspective of central banks on this topic. And then, of course, we have the pleasure of having central banks in our panel who will further elaborate on the central bank's perspective on this topic. So first of all, the big question when we talk about CBDC is about the timing. By when can we expect to see the CBDC eventually being introduced in our financial system? This is the first question when we ask about retail CBDC, and you see that the majority of participants, around 40%, mentioned that this will happen within the next 3-5 years. And if you also put in, there is about 20% also think that it could come even earlier. So basically more than 50% of the central banks that we survey around the world expect one of the G7 economies to launch a digital currency within the next 5 years, retail digital currency within the next 5 years. Then if we look at the wholesale digital currency, which in a certain way are, I don't want to say more simple because it would be not the right way to put it, but in some way would be something which would not go straight into the hands of retail, of consumer. If they expect actually this to happen quite soon. And in fact, there has been already some interesting pilot projects carried out. One of them is involving Switzerland as well, and UBS as well as a bank, where they use the blockchain technology to move funds cross-border between financial institutions. When we ask about this question, you can see that more than 70%, and nearly actually 80% of respondents think that once again, this will become reality in the next 3 to 5 years. So the first point that I would like to make as a result of our survey, that we are talking about something which is happening now. It is true that we are still in the pilot, and of course we could mention China, the upcoming Winter Olympics, which will probably see the real use among a high number of retail user of the digital yuan. This is happening and will eventually hit the global financial system relatively soon in the next few years. Then, of course, the other issues that was mentioned before is, first of all, the involvement. Here you see that I have to admit I'm losing the count of central banks announcing some action or some pilot or some testing of digital currency across continents. But you can see that more or less 15%, 30% are already involved in some concrete pilot projects, and about another 20% expect to do this in the next 1-3 years. So definitely a lot of action among central banks. Now, the question, of course, is why central banks are accelerating on the CBDC. And here I think there are the top 4 reasons which are mentioned by our respondent. I think they identify very well the drivers. First of all, is about improving the retail payment system. It's pretty obvious that if in the economy the use of cash has fallen dramatically, eventually something has to be done in order to update payment system to the innovation that is happening on that level. And that's the primary reason, which makes absolutely sense. The second is also about, you see, crime and money laundering prevention. This is very important. Bob mentioned financial stability. Let me add as well money laundering and prevention of fraud, which are very important elements that, as you know, are very much related as well to the so-called cryptocurrency, which are often used for this type of transaction. The third one is about the improvement of the wholesale financial infrastructure. So we are talking about payment, clearing, and settlement. So it is really about making more efficient the system of cross-border payments. Also think about in this area about the question of remittance, a very important source of income for many economies, which sometimes has attached a very high cost when they are transferred cross-border from the country where the immigrants work to their respective families. And then there is a fourth reason, which I think it is also very interesting, which is to respond to the pressure from the private stablecoin and cryptocurrency. Here, the process already started with some years ago when we had the first tentative from private companies to launch, for instance, Libra, and then with a different name, and of course the rise of cryptocurrency that we're witnessing and that Bob alluded to. Now, if I move to the next 3 slides very quickly, you can see that where they see central banks the most important use of CBDC, retail, absolutely, but also remittance, I mentioned them already, and once again, cross-border payment, very important as well. Now, what are the risks, which I know that Alex will also address from a central bank's perspective. Of course, it is a very important topic. You see there is definitely the one which is mentioned by most central banks is about the risk of disintermediation of the banking system and the potential implication for financial stability, which makes absolutely sense. An uncontrolled rise of private coins without any control risks creating some risk for financial stability. And I read more and more central banker launching the alarm on the potential effect of the rise of cryptocurrency on financial stability. And of course, this is something very, very important in terms of risk. And we will touch upon the topic shortly. Now, the question about the preferred architecture, this is very important because you already give an idea where I think CBDC are moving. You see that when we talk about what do you think it would be the preferred infrastructure architecture for a CBDC, 70% mention a centralized structure against a distributed ledger technology. For those who don't know, crypto is a distributed, for instance, Bitcoin is a distributed ledger technology. A centralized technology would be one where instead there is in some way the central banks or an entity at the top which has the control. Then interesting, the second graph, it talks about should be retail or wholesale. And you can see that many central banks themselves think that this cannot remain a pure wholesale exercise, which probably would have a negligible effect on final user, but needs to, in the end, provide this innovation to final users, so to retail user, consumer, investor, etc. And then there is a question which has often been mentioned over the last few years about should it be a single currency or should be a sort of a multilateral arrangement? So you hear sometimes people launching proposals for a digital SDR. Now, this is very interesting because currency is about sovereignty. And it's pretty clear that the majority of central banks wants to keep the sovereignty of their own currency, regardless if they're digital or non-digital, which makes absolutely sense to me. Final point that I would like to touch is about a topic which is very much in my heart, which is about reserve management. Because as you know, we are still in a system which is dominated by US dollar. There is often this view that eventually the rise of CBDC could change that. Is it, to this question, you can see that about 65% of the respondents believe that the rise of CBDC and the launch of CBDC over the next few years will not impact the dominant role of the US dollar, which I think it is very interesting. Second graph on the right, talking about the rise of the digital yuan, which is often presented and pictured as a tool to further enhance the international role, of the RMB. You can see that there is a little bit of uncertainty about that. The majority, more than half, respond to this question by saying, we do not know. So definitely there will be a lot of attention when the digital yuan will hit the global financial system to see whether this will also involve a rise of the yuan, of the RMB as an international currency in global financial architecture. Now, the last question which I think it is often mentioned, it is about there is often this parallel between digital currency and gold. If a digital currency, sometimes you heard about Bitcoin being presented as the ultimate safe haven compared to gold. Actually, here there is the majority of the central banks believe that gold will not be displaced by any digital currency, being a CBDC or eventually a crypto. And I think this is very interesting because it shows that gold still has some life in our global financial system as the ultimate safe haven. And actually, gold has been very much in demand among central banks in the last few years compared to what we saw in the past. So I would like to, before I pass the floor to Alex, I would like to mention that this is a slide that I use very often when I talk about this topic about what digitization means. And I think the right way to portray this development is that digitization is something which really creates a keep currency with new features. I think one of the very important effects that we are already witnessing is that this increased competition. Very often competition is what is required to change the status quo. And I believe that this is exactly what we're seeing happen in the world of currency, in the world of payments, in the world of digitization. Now, when we talk about what this will mean for some of the most important pillars of our global financial system, for instance, the role of the dollar or the role of gold, I think we are still in a very uncertain territory. And I think this story still has to be written and will depend on how successful will be different countries in launching their own central banks digital currency. So on that topic, I think you heard the survey of central banks. I think we have a great advantage of having a central banker in our panel. So without further ado, I would like to pass the floor to Alexander Servineau from Banque de France, who will really give us a more insight on the central bank's perspective on this topic. Please, Alex, the floor is yours. Go ahead.
Thanks a lot, Max, and thanks a lot for inviting me to this panel. Very interesting topic, hot topic, very much discussed those days, as you all know. I'll try to go through a few of the drivers, let's say, from a central bank perspective. I think you summarized, thanks to your survey, a few of the key topics that central banks worldwide have in mind. Let me just introduce to one of the G7 countries more specific approach to central bank digital currencies. I call this the state of play, and I will have only 3 slides to go through this, but please let's move ahead to the next one. First of all, and that's next slide please. Thank you. First of all, let's see where the drivers are from a central bank perspective. We've seen a changing landscape first and foremost in the payment area, and that's where the central bank started to really ask themselves questions about those new trends. And we've seen those trends accelerating in the last few years. I mean, in the last couple of years with the COVID crisis, I've seen even a rise in digitalization of the economies and payments. The new players have come through even more strongly. I mean, the big techs, some fintechs, I mean, they have been around for 10 years or even more, but then actually they have been even more active now in the payment area. And then we've started to see the emergence of new technologies and instruments in that space, especially in the payment space, with the tokenization of the payment assets themselves. And then we saw also the rise of financial assets being tokenized. So how to react to that? What are the major key issues for central banks? Let's remember our role here. And I think our role is really twofold. The first one is one that everyone knows, which is to preserve the monetary sovereignty and the financial stability in general. But the second one is also to promote innovation in a safe environment. So the central banks are more and more active in the innovation space as key actors of innovation, but also as promoters of the innovation itself and supporting new actors, new innovations, new initiatives in that space. If we go to the next slide. And if we look at the forms of money today, well, we have to adapt, basically. On that slide, you see, let's say, the old world and potentially what the new world will be about and how it will shape up. The central bank is already providing two sorts of money, let's say, to the general public on one side and to corporates on the other side. To the general public, you know the currency and the way it is basically dispatched through notes and coins. That's the direct link that the central bank and a government has with the general public. That's the safest form of money you can think of. This is a concrete, tangible asset which is in everyone's hand and can be in everyone's hand. In times of crisis, we very often see actually that there is a run to that kind of safe asset, notes and coins. On the other side, we have already a channel to actually have cashless money being distributed to economic agents. And that's being done through commercial banks or e-money issuers. That crypto money is something you see through bank deposits, through electronic money purse and so on, used with cards, with checks, with electronic transfers. And that's basically what is used by a commercial bank to leverage and to go to mortgages and to lending to the economic society in more general. What we do with wholesale CBDC and retail CBDC is to mirror that in the digital age, as simple as that. And one of the key advantages, if you click on the slide on the mouse, is that actually there is a convertibility aspect at par between all those different types of money that central banks are issuing. So that's really very important to understand that what we are doing here is not a revolution. What we are trying to explore is new ways of distributing forms of money which are adapted actually to the digital context. And we are just expanding on something that we already do. Let's go to the next slide. Now, in fact, the key question is that we have those financial assets being tokenized those days. So it gets back to the fundamental question of the role and form of central bank money for us. And we see here what the market demand is actually about. There is today, when we look at wholesale CBDC, and I'm just talking about this topic right now, there is a market demand for putting cash on the ledger. The issue with that is that stable coins that we all know, which are pegged or linked back to some kind of safe assets, sometimes fiat currencies, sometimes other form of government bonds and commercial papers and so on, they could actually challenge the role of central bank money as a settlement instrument. And that could lead an exposure of central banks to risk of outsourcing our safe assets to the private sector. And this is something which is fundamental here in the approach to our role, is that actually here, the central bank money is the safest, most liquid asset you can think of. It's also protected by regulation very often. And it's something that the market is demanding just to be able to settle safely with the central banks. Now, if we think about actually the types of risks, I think, Max, you mentioned a few of those ones through your survey. I won't come back to that, but I will focus on maybe one or two risks that haven't been mentioned. The first one is the liquidity fragmentation. If we leave the market alone and those private initiatives to emerge in the settling of assets, we may see more fragmentation on the market. Liquidity fragmentation is costly, is less efficient. That's something that is a concern to us. Now, another thing that you mentioned a little bit earlier, which is a side effect of all this, is what about cross-border transactions? And we are operating as central banks payment systems. We are operating infrastructures for sure for financial assets, but we are operating also payment systems. And cross-border transactions in those two areas, infrastructures and payment systems, can be actually a little bit more efficient maybe by using the technologies which are coming from this new world of DLT and blockchain. So we have to revisit here the condition under which we issue and offer central bank money to the financial industry. And that's all our ideas moving forward. If we go to the next slide. Thank you. And that's the last one here. So we're actually very active in two different areas, the retail CBDC area and the wholesale CBDC area, with the same objective, which is summarized here on screen, to preserve monetary sovereignty. As you understand, the role of central bank money is really key here, but to contribute also to cross-border, cross-currency payments and infrastructure to make them more efficient as a whole. Now, there are slightly different drivers on the two sides of the screen and the two sides of those CBDCs. I mean, on the retail side, we have to provide some kind of digital complement to cash. Indeed, the decline in cash and cash use, especially in the last 2 years, I mean, is a concern to us. So we have to look at the equivalent in the digital space. So that's one key driver. We have also to make sure that there is digital financial inclusion. And that's something that, as a central bank for the public goods, is in our mission. I mean, how to give access to citizens to basic digital payment needs. That is something also which is in our minds today. We have to be still a catalyst for innovation in payments. We do think that there is space here for retail CBDC to accelerate the emergence of new fintechs, new innovations in that space. And then we do think that that link with central bank money through retail payments is actually a link also to the resilience and to the stability of the payment system in itself. In the wholesale space, things are slightly different. There is more market demand for it right now. It's all about ensuring the role of central bank money is keeping central, promoting it as the safest, the most liquid asset for all, basically, and also to facilitate innovation. We are getting those demand from the market being experimenting a lot with digital assets and financial assets being tokenized those days. Again, as I said, there is demand for cash on the ledger. We have to experiment with the market players. Let me just finish with one thing. We started actually a quite ambitious program regarding experimenting with the wholesale CBDC about 2 years ago. We've selected actually 9 experiments out of 40 applications coming from the market players. We have issued a report less than 2 weeks ago on all this, and I would encourage everyone to have a look at that. This is really fascinating, and I have a few slides, spare slides, if you want to explore that a little bit more in detail. But we've issued everything from cross-border, cross-currency, settlement, delivery versus payment, payment versus payment functionalities, issuing supranational bonds, issuing listed securities, unlisted securities from issuers on ledgers, on different ledgers, making all that interoperable. Studying how the central banks can still keep control of what's happening on the ledgers, that being permission ledgers or even more open public ledgers, but with authorization and access control when entering the system. So I think it's a very ambitious program. We have still not finished with that. We're going to carry on next year with exploring those different possibilities. But there is really a strong driver for wholesale CBDC. And as you know, on the retail side, we've launched the digital euro within the euro system, the investigation phase for the digital euro to be more complete. This is a 2 years investigation phase. We are just starting right now to look at the conceptual, the architecture itself, all the use cases and the role of the intermediaries. I think that was a topic really mentioned a little bit earlier. Intermediaries in the distribution of the retail digital euro, their role in also redeeming the digital euro in the ecosystem is a central aspect here to consider. And obviously, we want really to separate two things in the retail space: what the back end would be coming from central banks and what the front end has to be, encouraging innovation, new forms of payments and more adapted forms of payments in the digital era from market players. So I think this is really the way for us to consider retail CBDC in a very open manner in a partnership with the actual private sector. So that would be it on my side for a quick introduction of that topic and our perspective as a central bank. Thank you a lot.
Thank you very much, Alex. Much appreciated. Before I ask Christian and Lawrence to give their perspective, I have already a question coming over to the Q&A. I would like to stick for the moment to the payment side, because of course that's the topic of the first part of the panel. And I read this for you. How would a wholesale CBDC interoperate with existing payment system? I think this is a very good question, because ultimately CBDC will be something which will change the payment system. And I know that Banque de France has already been doing a lot of work on that. Maybe Alex, you want to mention that here? They mentioned really Swift RTGS system in terms of also the interoperability, which I think is a very good question.
Yeah, it is a good question. I think there is a panel of options right now from a technical point of view. For sure, we have considered and we are considering the way to bridge with the legacy, let's call the legacy systems, which again are making 100% of the transactions today. So let's not wipe this out and let's be realistic. There is really to consider what we provide as central banks. In Europe, this is indeed target 2 for payments. This is target 2 securities for the settlement on financial securities. And those are strong assets that we still want to promote. Strong assets that will be consolidated, by the way, in the next year. So there's a lot of investment from the public sector, from the central banks on that side. Now, I think there is more like a medium to long-term consideration regarding DLTs and how we can interconnect those two worlds. The questions are really open. I mean, would that be a bridge to the existing systems? Would that be some kind of parallel systems? New ways of doing the transactions? I think there is a question mark and we can't be definitive at this stage, but we're definitely actively exploring both. And again, that will be driven by market demand. If we think about wholesale CBDC, this is not the same as retail CBDC. There are connections, but those are not exactly the same. In the wholesale CBDC space, as I said, there is definitely right now experiments or more even concrete projects coming from the market on tokenized financial assets. And there is here a connection to be made with the settlement facilities that we are providing as a central bank. So we need to look at the way to modernize actually our settlement facility and our settlement services. We are considering that very, very seriously. On the retail space, the question is slightly different. We are more autonomous in that space for the backend. I mean, that's quite clear. But we have to interact with the front end. So the innovative solutions coming from market players, e-wallets, cards, all those fancy things that we all know and that the private sector is very good at providing. So you see slightly different approaches depending on what we are talking about. But for sure, the existing systems are very performant, very resilient. We have to see how to improve actually access to central bank money through those systems with those new considerations.
Thank you, Alex. I have a lot of questions and I will try to group them all together. Let me first of all now move to Christian. And of course, Christian is an investor, in particular fixed income investor. So he can provide a little bit your view on this topic of CBDC. And as I say, we will then talk more in detail shortly about the investor perspective, like what does it mean, what it is for investors. So please, Christian.
Thank you, Max. So when we speak about digital currencies, we actually speak about 4 distinct concepts. The first one is the tokenization of financial assets with the use of a distributed ledger technology. The second is cryptocurrencies, the tulip mania of the 21st century, if I may say so. The third one is retail CBDCs, and the fourth one is wholesale CBDCs. Now, CBDCs couldn't be further away from cryptocurrencies or the tokenization of financial assets. They have nothing to do with these 2 concepts. Central bank digital currencies will most likely be settled using regular accounts, not a distributed ledger, centralized accounts, not a distributed ledger technology. And they will be pegged to the fiat currency, convertibility at par to the existing currency. So they have nothing to do with cryptocurrencies, and they have nothing to do with the tokenization of financial assets. Retail CBDCs would basically be the central bank's answer to PayPal. Yeah, it's a public form of PayPal that is made available to retail customers across our economies, and that has certain advantages. Now, with respect to wholesale CBDCs, I'm personally much more skeptical. I mean, central bank digital currencies, in a nutshell, are nothing but opening the existing central bank deposit facility to non-banks. That's what it is. You open the deposit facility to non-banks. And if you keep in mind that commercial bank deposits are nothing but a senior unsecured claim on a bank that can be lost at any point in time if that bank runs into trouble, then you can already see the dangers inherent in central bank digital currencies. We've seen in Europe, the case of the Cypriot banks, which went bankrupt a couple of years ago and resulted in haircuts on deposits. We've had Greensill Bank in Germany going bankrupt last year. Large depositors had to take a haircut. And people become cognizant of the fact that holding money in the deposit accounts of commercial banks is not risk-free. So if the central bank opens its deposit facility to non-banks, I think that could create a lot of deposit volatility, deposit wars in times of financial stress, and could actually make that stress worse. Yeah. So personally, I think that retail CBDCs are a sensible idea as an alternative to PayPal. Wholesale CBDCs, I think, are quite dangerous with respect to financial stability.
Thank you very much. You touch upon some issues which have been asked. For instance, I have a question, will CBDC be pegged to gold or the fiat currency? I think you already answered, it's pretty obvious. We're not going back to the gold system because of the launch of digital currency. And there was also a question about the fact that basically CBDC would involve the opening of an account from retail at the central bank. In reality, this is a very important topic for central bankers, in the sense that actually, technologically speaking, probably would be possible, but I think central banks do not have much appetite for that, also because of the disintermediation of the banking system. And apart from that, I don't think central banks want to transform themselves into tech companies. I don't know, Alex, correct me if I'm wrong in my interpretation of the view of central banks on this topic.
I think you are quite right. Let me clarify a few things, because I heard some kind of shocking comments actually from Christian in a way. Let me clarify really, from a central bank perspective, how we approach, those different things. Wholesale CBDC is not about opening the central bank RTGS accounts to non-banks. Absolutely not. I mean, wholesale CBDC is about actually tokenizing central bank money and seeing how this can be adapted to the new market demand for financial assets which are tokenized. That doesn't change actually the role of intermediaries, the fact that they are regulated, and the fact that we are supervising the intermediaries and the way they access central bank money. So let's really be clear on that. Wholesale CBDC is not let's say, a requirement that accompanies actually opening central bank money to non-banks. That's very clear. Now, on the retail side, one thing also to keep in mind, retail CBDC is not necessarily a competitor to some market solutions. I think, Christian, you mentioned PayPal. PayPal is a front end, as I said. I mean, the goal of retail CBDC is not to compete with a front end. The goal of CBDC on the retail side, what a retail euro, digital euro would be, is to be able to circulate in those e-wallet solutions, is to be able to circulate with the different payment solutions which are coming up on the innovation side of things, which are provided by fintechs or big techs or traditional banks. That's the way we are looking at things. So we are really trying on the retail side, at least in Europe. I mean, I don't know how things necessarily develop in other parts of the world, but at least in Europe, we are very well aware of those different issues that could arise. And we want really to have a clear boundary between what the market players can bring and how they can still innovate. We want them to innovate, but we want also to make sure that there is digital financial inclusion. And this is where we stop. We stop at distributing actually that potentially digital euro. So just wanted really to clarify that. On the question, Max, yes, indeed. I mean, the CBDC, retail CBDC will be fiat currency actually, but digital fiat currency. If that happens in Europe, if we have a digital euro, this will be the case. There is no way we're going to consider things differently.
To Alex, maybe it's his Wi-Fi connection, which doesn't transmit at the same speed the video and the sound. I have a follow-up question on that because it's one of the questions, but let me turn to Lawrence now to provide her perspective on this particular topic that we are discussing about the role of central banks and the nature of CBDC. Please, Lawrence.
I think I'm quite in disagreement with Christian actually on the wholesale side. CBDC for us is really important, and we are very much supporting CBDC, and I would say the wholesale CBDC. Overall, I think we have to move from threat to opportunity, and cryptos have been a threat at the beginning. Also, some private associations like Libra, which became a DM, were also a threat, and we should just see it as an opportunity to move in the innovation space and have a natural evolution of money, which is currently the case. So for us, it's really supporting these kind of new technology within our ecosystem, and we'll move to it in the second part. But obviously, if we can have cash tokens, it makes a big difference to all the use cases we're working on, and the shift we will also see in our markets.
Thank you very much. Before we move a little bit to the investor side, I have a very two quick question. I think one for Alex and the other one, of course, everybody can. One for Alex is about the ECB, because you saw in the survey I mentioned retail or wholesale CBDC, and in the actual public statement of the ECB, they talk about retail CBDC. I mean, can you confirm that basically the ECB is working on a retail CBDC, which ultimately will impact the retail sector, not just a wholesale? So that's one question. And the second question, where I know that there has been a lot of work to be done by the ECB, also from my fellow Italian Panetta as well, about the relationship between fiat currency and digital currency when they will be together, because of course that's an area of concern for central banks as well, for the ECB with regards to the role of banks. So these two, one topic is more a clarification, one question, the other one is more important, is the relationship between the fiat and digital currency once they will be launched.
Yeah, so I mean, very clearly on that, we have launched as part of the euro system with the ECB, all the central banks issuing the euro, we have launched an investigation phase, as I said, for a digital euro. That is a 2-year phase that will end at the end of 2023, and we will issue a report to the governing council. So the governors from the Eurozone will actually decide based on this for a go, no go on the digital euro. I mean, that's as simple as that. The wholesale CBDC part is being more explored right now within the central banks and within the euro system. So that's something that we are considering actively on our side. So, I mean, let me be clear on that. That's one question. The second question is on the role of intermediaries. I think I also talked about that during my few slides. And the role of intermediaries is key here. And we really want to ensure that the intermediaries will have a play within the retail CBDC space. That's more, you know, that side of the CBDC that where there is a concern or an open question, let's say, from market players. We do think that this is a scalable way of distributing the digital euro to the public, but also to economic agents if they need some. We think also that the relationship with the end customer is something that is very key to commercial banks, to the fact that they are holding deposits. And this is something that as a central bank, we would not really want to do. So the role of intermediaries in that, let's say, new retail CBDC ecosystem, what the digital euro could be, is very important, and I think will not be really challenged that much. So let's be also quite clear here. This is a key topic of interest to us. We do not want, at least, to be disruptive with the commercial banks and their very important role right now in the financing of the economy in general. Thanks. And sorry for the video lag that is around, sorry.
Thank you very much. I'm focusing on the sound and not on the image. Thanks for that. Unless there is any final comment on this from... I would have please, Christian. Please, Christian, go ahead.
So, Alex, maybe you can help me. I've got a question here for you. So, retail CBDCs, what's called the digital euro. There's been this Governing Council decision on the 14th of July, 2021. As far as I understand, they're basically an electronic wallet, yeah? And I can move money from my commercial bank into that electronic wallet. I will have a deposit account at the central bank, and then I can use that for this and that. I can buy stuff over the internet, or the government can put money into that account if they want to do helicopter money. Yeah, so something very nice. And in order to avoid any bank run issues, you're limited to 3,000 euros, say, per customer. No, so I understand that it's an opening of the deposit facility of the central bank to retail clients, and it works without tokenization. No, now could you explain to me what is the role, or what is the purpose of wholesale CBDC, which is not covered by the digital euro project, if it does not entail opening the deposit account to non-banks?
Maybe two things in your question, Christian. First, on the digital euro project itself. I think things are not settled in stone regarding especially opening end user accounts at the central bank level. So again, that's getting back to my point on the role of intermediaries and the role of commercial banks. I think what you're describing is a little bit going too far regarding what we are doing right now, which is to work on actually the concepts and the architecture that would support a digital euro. The options are still on the table, and we haven't finalized things on this. There is clearly, again, some things that the central bank knows how to do, and for a backend architecture, and some things that a commercial bank and digital solutions can bring to actually the end users. I think that split needs to be preserved. That's more of a personal opinion here. So I'm not sure that actually having a direct opening of account to a central bank is something that is either likely or something that we would want to for that reason. There could be maybe some technical accounts, but really from technical nature that would be handled by a central bank. This is, the type of things we need to explore a little bit more right now. Now, wholesale CBDC is a different story. I mean, what we call wholesale CBDC is a different story. And I think Laurence also mentioned it from an AXA investment management perspective. This is not about opening accounts in the central bank books to actual players. This is actually giving access in another form to the central bank money, which is used to settle the transactions. So, I mean, this is really adapting actually to the fact that financial assets are being tokenized and are being circulated on ledgers. So how to bring that in the picture? This is a slightly different story on the wholesale CBDC side. I hope it clarifies, but we can carry on discussing if you want offline, if you would like to. Thank you.
Thank you, Alex. Before I move to the next sort of final part of the panel, there is a question about stable coins. I believe that if I was a central banker, the real competition probably come not from Bitcoin, but from stable coins, because at the end of the day, first of all, they have this also low volatility. Do you think that stable coins what is the relationship in the future eventually between stable coins, which are of course a private issued, if you want, or non-central banks currency, and central banks digital currency?
Yeah, I mean, this is what I said also very quickly, very briefly at some point, is that stable coins are bringing that question in a very striking manner for central banks. I mean, is there a possibility for stablecoins being brought on DLTs to actually provide a settlement mechanism, private settlement mechanism, that would encourage some market players to move away from central bank money, so to move away from the safe settlement asset? That is a concern from a regulation perspective. That is a concern also from a financial stability perspective. So yes, I mean, for us, this is the key concern on the wholesale side of
the
things.
liquidity.
Absolutely.
The liquidity
and
behind
that's
it.
something that we want to stay with.
Clear, very clear.
Yeah,
Thank you very much.
liquidity, but also safety.
Absolutely, absolutely. No, I understand that, and thank you for the clarification. So let's, we have about 20-25 minutes left. So let me move now to a little bit more the investor perspective. And I would like to start immediately with Christian, also on the back of the experience that Christian, you did also with the first issuance, for instance, from the European Investment Bank. Can you, and then of course, I would like to listen as well to Laurence's perspective on this level. So please, Christian, if you want to share with us as a bond investor, what was your experience on that?
Yes, thank you, Max. So on this issue, what's in it for investors? We've participated in the first digital bond issue in the world. I think the EIB bond that was issued in April 2021 was the first time that a digital bond has been placed publicly. And we see this as a door opener for the use of blockchain technology in the issuance of securities. On this project, Union Investment, we worked very closely with the EIB as an issuer, with the DZ Bank as custodian, and with the joint lead managers, Goldman Sachs, Santander, and Societe Generale. A word on the technical process of asset tokenization, which is the basis on which these digital bonds have been issued. In this transaction, a security token was generated and transferred onto a blockchain. This is a digital mapping of the rights and obligations of the underlying asset, and it was used in the settlement process of the transaction. Everything else remains the same. The risk and return profile, as well as the regulatory characteristics of the tokenized bond, are absolutely identical to those of a commercial bond. And Union Investment, we see this as we see good chance that the use of blockchain in combination with tokenization could establish itself as a market standard in the future. There are a number of advantages to that. The first one is speed. At present, the process of a bond issuance or an IPO on the equity side is still very much handled manually, from the subscription to the settlement of the respective transactions. Blockchain technology, on the other hand, enables us to do much faster, cost-saving and more efficient arrangements. And we believe that in the future, transfers can take place virtually in real time. Also, tokenization eliminates the needs for physical custody of securities with a central security depository. So in a nutshell, the advantages of tokenization of assets are fewer intermediaries, faster processing, lower transaction costs. And I think that with this, we can really revolutionize the primary market for both equity and bond issues in Europe. We can bring down the barriers of entry, and we can make that market more accessible to small and medium-sized enterprises, which so far have to rely exclusively on bank funding in Europe. So that is basically the use case that I have. I can say a few words on other aspects, such as is it a threat to the dollar, and what do we like central banks to do, but maybe we leave that for later.
Yes, thank you very much, Christian. So an efficiency play, but also with some important implication about let me use this word they love, the digital the democratization of the financial system, with more players able to play the game, which has not always been the case, particularly in the bond market, which is sometimes for the big players as well. So let me turn, before we open up, and there are more questions coming in as we speak, let me turn to Laurence, who also has been doing at AXA a lot of work on this topic, so to provide more the investor perspective.
Sure. I think we are very much aligned now with Christian. That's the good thing. We are working and really believing that blockchain as the technology itself will really change the way we operate. We are in complex, intermediated markets, and with a lot of layers, so a lot of loss of time. And And actually, distributed ledger technology and smart contracts are really an opportunity for us. And so we can see, and Christian mentioned it, new issuances done on blockchain technology. So basically having a digital record of financial security, which is in a position to the cryptocurrencies actually really under the financial regulation. So it's really important to mention that. And we see that there is an impact on all the value chain and mainly on the middle and back office processes. And for us, it's really that's why it's really important also to have the cash on chain, because today where you can invest and buy or sell digital assets. So, for example, the digital bond from the EIB, you cannot settle directly on blockchain. And the full potential actually for us is to have this delivery versus payment directly on chain, which would make it instantaneous. And therefore, where today we have a settlement process with SWIFT, we would have a settlement process on chain with the digital security versus the digital cash. Where today, when we did buy the EIB bond on the secondary market a few weeks ago, we did not have the possibility to move the cash on chain, and it had to go through bank accounts, escrow accounts, etc. And it keeps the counterparty risk, and it slows down the process. And where you would have a perfect fit between cash and securities, there you reintroduce operational risk. So it's really key for us to have cash on chain. Obviously, cash from a central bank brings the stability, brings also a framework of digital monetary policy, which is really fundamental here. And we would, we need to move into that direction. But also, if there is a standardized and solid stable coin, it could also be an alternative. But obviously, it depends what's behind and how it's regulated and framed. So today, to move on, we'll have the DLT pilot regime, which is coming into force next year in Europe. And obviously, there will be potential to do more transactions. And if we can have support from central banks with digital cash tokens on chain, it will really make the things scalable for us. And where we look at investments, we also look at funds and how we can digitalize funds, how we can issue funds directly on blockchain, how we can manage subscription and redemptions through smart contracts. And obviously, where we use smart contracts to trigger events, it would be great also to trigger payments with a cash token. That's why we think it's very important that central bank work in this direction, and also other institutions, commercial banks, etc.
Before I continue on some more questions, let me take one question from the participants, which is about the regulatory framework. How about the regulatory framework that is one of the enablers for utilizing DLT? Isn't this one of the first things that should be looked at? I think it is a good question, because we are seeing the whole action among regulators. Basically, I believe that we are going to have regulation before CBDC, right? If I think in terms of timing, it is very likely that some new regulation concerning the whole world of the decentralized digital currency will come in. What do you think, Alex? Are these the steps that we're going to be undertaken by central banks and regulators before having a clear regulatory framework for things like crypto, etc., and then CBDC coming into the picture, or the two things will move in parallel? I think it's a legitimate question.
You know, it is a very good and very pertinent question, actually. The two things are moving in parallel right now. So we are working on the regulation. I mean, you know the MiCA proposal, for example, in Europe, which also encompasses this pilot regime Laurence was talking about at length. So we do think, I mean, those things are moving ahead. There is more initiatives at the international level on that side, at FSB, so that's G20 level, where considerations around stable coins, but also crypto assets and the way to regulate them according to the risks. You know, I mean, we like on the worldwide scene this same business, same risk, same rules principle. And actually, this is something that we are trying to bring forward with all the different public authorities from the G20 countries around the table. That's a challenge. But for sure, in Europe, there is a framework in place, and there is regulation at stake. I think on the CBDC side, both retail and wholesale, things will probably be a little bit slower, and we will see a little bit more, in the next year or so, if this accelerates or not. I think for the retail digital euro, we have a clear plan. That clear plan is, again, 2-year investigation phase, end of 2023. That's the rendezvous clause, as we call it. So nothing will be introduced as a digital euro in the meantime. That's quite clear. On the wholesale CBDC side, we have also that path among central banks, which are looking at this in Europe. Some of them, like us, very active. But also we are looking at this with the Eurosystem, with the other colleagues from the central banks. We don't have a deadline, a specific deadline around that. But again, we've been doing some experiments with the market, with a lot of players, and we are accelerating also on considering the issues here. Let's be a little bit careful. CBDCs could be disruptive if not brought properly to the market. And I say disruptive in the bad sense here. So let's be really careful about the role of intermediaries and what we are doing. That's the approach.
Thank you, Alex. Christian, I think I have a question that I would like to direct at you, because you mentioned the efficiency, the lower cost of what you did, for instance, with the European Investment Bank. And here I have a question about whether these lower transaction costs are realistic, because sometimes a crypto settlement cost can also be very high. Maybe given the fact that you have been involved in one of these, in this transaction, you might have a clear view. There is a clear efficiency in terms of cost reduction?
Absolutely. I mean, right now in the primary market business, there's so many counterparties involved. And we actually, in the standard issues, we rely on fax machines. I mean, this is 20th century technology. So, and there are so many problems that may arise. I mean, in the settlement of those, every day I get complaints that some, I oversee 200 investment funds and around 80 billion in euros here at Union Investment. Every day I get a message that some transaction has failed. And then we have dedicated staff sitting there looking through the fax machines and looking through the paper trail of the communication with our broker dealers to figure out why it failed, and then to make compensation payments. This is extremely cumbersome. It's a 20th or 19th century technology which should be overcome. And I think that the new technology of a distributed ledger can help in that respect. May I add one aspect here, Max? When it comes to tokenization of financial assets, we have the settlement issue, but we also have the investment issue. And I think there is an important link to what we're discussing here today with the Fit for 55 agenda of the European Union and the generational challenge of decarbonizing of our economies, which we will have to face in the next 30 years. So there will be massive investment needs in the European economies until we reach net zero by 2050 or 2055. And I personally don't see how those investment needs in the upgrading of our infrastructure, in changes of processes and products can be carried out by public investments. I really don't see that. I think it will require private investments. And many of those investments will be in new technologies, and they carry risks. And I also don't see how the commercial banking system that we have in Europe will be able to fund all of those investments, because they're very high risk investments. So there is a big role to be played for the capital market, for insurance companies and for asset managers. And what we need to achieve is we need to bring a lot of new, smaller entities to this market. And we haven't got the technology right now. And I think this is where tokenization of financial assets comes in. We can bring a lot more smaller issuers to the market, give them access to bonds and equity securities in order to fund the transition towards a decarbonized economy.
Thank you. I think you raise a very important point. So basically, digitization is an enabler of the capital markets union, which has not really accelerated as I think many would have expected in order to support the recovery and the growth rate of the European economy. And in the post-pandemic, this will become even more important. I don't know, Lawrence, before we move really to the last topic, which is a little bit more flying very high about the future of the world and the global financial system for the last topic, you want to comment on that, about the efficiency, about the way an asset manager sees really this digitization impacting the way we do things in asset management?
Yes, of course. I think we can see in the longer term that it bring efficiencies. It's logical because of the distributed ledger and you don't need reconciliations, for example, anymore between systems and data silos. So that's really one thing where efficiencies will be clear. I think today, when I look at what we do, I cannot really see efficiency yet. For now, it's really on the private market. So obviously, it's a very manual work on there. If we move to a more automated market, then it's another question. And I'm not sure you can have the full benefits straight away. But if we have this instant DVP, which I mentioned earlier, we can look to automated life cycle of assets. And I think there will be efficiency gains and where it's important to us. But obviously, when you use technology, you have to pay for technology. And that's also a new cost we have to include. There are other risks as well. So obviously, it's not that obvious, but I can follow Christian's point of having efficiency in very manual markets, which we have today.
Thank you very much.
And maybe, if I may,
sorry, please.
On the model, I think everyone is experimenting today and trying to find the best way to move on, because obviously the technology moves on very quickly and we need to adapt. But potentially it could be a hybrid model, and not only a public sector investment, but a hybrid model with public sector giving a direction and the private sector having the infrastructure or building the technology, etc., how Christian mentioned it. I think that might be more the case in the future, but today we need a framework, we need standardization, we need policies and stability, obviously.
Thank you very much, Lawrence. We really have about a few minutes left, so I think we really would start from payments cross-border, then we discuss about the opportunities on the investment side. We heard the perspective, so both of investor, asset manager, and of course the perspective of a central banks from Banque de France with Alex. So I think we started to see what are there is a lot at stake here, I think, and that's definitely something which has the potential to eventually change many. I don't want to say now to be a revolution sometimes, but for sure it will change deeply how we do certain things in the global financial system. So let me ask a final question to all three of you, which is actually, this is exactly 50 years ago that we had the so-called Nixon shock, right? When we had the end of the convertibility of the dollar with gold. Basically, we move into the system that we are now, which is a floating exchange rate, or in some cases, semi-floating or semi-pegged. We have free capital flow, free movement of capital, and the US dollar is the de facto global currency, the dominant global currency, which is used particularly in cross-border transaction and, for instance, for pricing commodity and etc. Now, if you look at what's going on since the last few years, first of all, this system basically has not been shaken by the most profound crisis. Just to mention, the great financial crisis in 2008 did not really change the role of the dollar, despite the fact that the crisis actually emerged in the US in the real estate sector. Then we had the COVID. It seems really that this system has been resilient to a lot of different shocks. And then, of course, we have now this new development, which is the digitization, which has been going for a while, and now seems to be accelerating also in the financial sector. Let me put on top of that some of the important change occur in the global economy, the rise of the RMB. I would say also the rise of the euro and the resilience of the euro. We should remember the euro fiscal crisis 2012. 10 years now, the euro is not anymore in an existential crisis, but actually it has the potential to develop further. And also the ECB has signaled an interest to promote the international role of the euro in the last few years, which is also new. But we also have a deglobalization. We have the sort of emerging of a sort of a multipolar system, and then of course COVID-19. So my question is very simple. In the light of this technological innovation that we are witnessing in the system, and which is of course impacting step by step different parts of the system, it might well be that technology will disrupt, and now I use the word disrupt, Alex, in a good way, not only in a bad way, but in the sense of creating a profound change, the global financial architecture as we know it, and eventually what do you think could be the outcome ultimately of this process from on any aspect of the global financial system that you think is relevant? Maybe we start in the invert order. We start with Lawrence, Christian, and Alex. So I start with Lawrence before, if you have any view on that.
Yes, I think the disruption will be quite strong in a good way. And I really think it's a great opportunity to really rethink the way we operate and globally, I mean, in the capital markets. And it's also, I would say, funny from my perspective, my personal perspective, to see the impact of a technological shift onto a geopolitical environment and a race to a competition, and also a fight between big areas of the globe among each other. So I think it's a real shift in a new world. And it's important that it has a structure around it and a framework around it to make the best out of it, and to also bring it in line with what we need to do. And we mentioned earlier also some environmental impacts, which are important, and also for stability worldwide as well.
Thank you very much, Lawrence. On a positive note, Lawrence, I would say. Christian.
Yeah, Max, so you've proven that when you put a bunch of Europeans into a room to talk about global financial issues, it will take less than an hour before they start complaining about the dollar. And that's what we have now. And indeed, it is a bit of a mystery how an economy that runs a fiscal deficit north of 12% of GDP and a current account deficit north of 3% of GDP can still have a currency which is as attractive as the dollar is today. Now, the main reason, of course, is the liquidity of the US financial markets and the fact that you can very easily transform securities into cash and vice versa, more easy than in any other currency of the world. Now, in that respect, I found an article that Barry Eichengreen has published in July this year on Bretton Woods at 50, quite interesting, in the Review of Political Economy. And here he argues that the emergence of central bank digital currencies could give rise to a larger role for second-tier international currencies, such as the Australian dollar and the Swiss franc, because the ease of transforming cash into securities and reducing transaction costs may improve. Now, the euro is no longer a second-tier international currency. It is a first-tier emerging international currency, pretty much on par with the US dollar. But I do believe that it could also continue to strengthen the role of the euro if we were to move towards a digital euro.
Thank you very much, Christian. Indeed, as someone who has been operating among central banks, I found that the resilience and the dominance of the enduring dominance of the dollar is one of the most remarkable historical trends that we have. And we will see if technology will change that. Alex, the last word for you as a central banker. In the end, you are the one issuing the regulation. So for us, so to you.
No, thanks a lot. Thanks, Max, and thanks to Lawrence and Christian. I think it was a very interesting discussion. I will be very, very short. A lot has been said as concluding words by Lawrence and Christian, and thanks, Max, also for your perspective, historical perspective on things. I won't enter into the geopolitical debate. This is a sensitive topic, and I'm a central banker, so I'm going to reserve my words there. But let's say that there are really a lot of things at stake, both, you know, in the public sector, let's say, generally speaking, and also in the private sector. I think CBDC is an answer as a topic. CBDC retail wholesale is an answer to the market demands and to the evolution characteristics of the market on the financial side, that being payments, that being investment. We are trying really to be in that innovation space, accompanying the actors on one side, but also in the regulation space, regulatory perspectives on things. I heard, you know, the call for clarity on that side of things, but also for innovation on that side of things for regulation. It's very often a challenge in Europe, but we are trying also to bring some regulatory frameworks which are allowing for innovation. So that's more or less, you know, my concluding words, generic words for all of you. Thanks.
Thank you very much, Alex, Christian, and Lawrence. So I will finish with a neutral quotation from a professor of Princeton, where I often read the Harold James said actually that also Christian knows very well, because we had the opportunity, if I remember well, to be with him in some events around the world. Unfortunately, when we used to travel around the world before the pandemic. But let me just finish. That's the way you finish an article talking about this revolution in the digital currency. This revolution will be driven by digital technology that enable not only new forms of government issue fiat currency, but also private currency generated in innovative ways, such as through distributed ledgers. This development is as important as the break with fiat currency. The world is quickly moving to money based on information rather than on the credibility of a particular government. I think it is this is the big question that we have in front of us. And with that, and as we look at this evolution or revolution, depending on what is your view, I really conclude this panel, which was very interesting. And as you know, AMIC has been focusing a lot on this topic, on digitization, and we will continue focusing on this topic together with others, of course, in the 2022. Let me say to everybody, happy New Year, Merry Christmas. We are almost there, and of course, I hope you are all healthy and you will have the opportunity of staying with your family. Thank you very much, and bye-bye.
Max, thank you very much indeed. Let me just conclude by.
Thanks.
Let me just conclude by thanking Max, Alex, Laurence, and Christian. I thought the discussion was very good indeed. The interest level was, I think, very clearly demonstrated by the volume and also quality of the questions. And I would like to thank very much everybody who has participated in this panel. We'd like your feedback. There is a form to be completed. I guarantee it won't take you very long to complete. So thank you very much, and we will end the session here. Thanks.